Hi, this is Acme with a rather late edition of the Bulletin Board Heroes here at Box Markets. It's Monday, the 15th of August. Starting off with the FTSE 100 and a bit toppy now. A bit of a failure today after sort of a bit of a bull trap there through the 75.20 level. Support around the 74.60 area, so hopefully that'll hold along with well, basically finding support at that broken April resistance line, so there's hope while we're above that. Otherwise it's down to the 200-day moving average around 73.80 as a first test for support. RSI also looking a little bit flabby as well. We peaked out just around the 66 area, so just below the overbought rather 70 level, but as I said, just looking slightly weak to start this particular week. Moving along to Bitcoin, where we hope that things are going to start resolving themselves sooner rather than later. We've been consolidating for quite some time, so let's see where we are there at the moment. Again, looking a little bit like the FTSE, that the week has started off a little bit flabby. 25,000 plus was what we were looking for. We just nudged through that, so that does suggest that is the psychological and technical level to watch out for. Otherwise, below 25,000, the risk of 22,000 at the rising 50-day moving average level, and then below that, it's 19,000, which was initial July support. But nothing lost or gained, really, just, as I said, a slight a negative bias to start the week. On to the stocks, and I covered Ascent yesterday in my little editorial, the week in small caps. And it's always good to get sort of things in focus after the trading week is over. We were initially looking for around 5.3, 5.4. We managed to do that today, which is great. And above 5.3 at least. And that was also, I suppose the 5.2 area was actually the old 1 year resistance. So about, let's call it above 5.2, looking for as high as 9 pence by the end of next month, which is the top of a broadening triangle from early last year. I'll just go back to see how long ago it was, but turnaround there for Ascent Resources after quite a long time of consolidation. You can see that the top of that triangle there from back in the spring of last year. So 9 pence there, while we're above the 5.2 pence region, is still possible. Onto a stock which has had a bit of a rocky ride in the recent past, but slight recovery here for Advfn. And the reason for that, apart from the technical signal there of the bullish divergence, is that we've got in place a bear trap gap reversal. So we gap down through the lows, the old support area around 55 pence. So an end of day close above that. Could see the shares up to 75 pence by the end of next month as a gap fill rebound, and basically underlining the way the shares are in a range between, let's say, 50 and 85 pence. But the main plus point there, that break above the 50-day moving average at 51, while we're above the 50 pence zone. Looking a little bit better for Advfn. Onto a stock which seems to be rather exciting at the moment. If I can tap in the right EPIC code, which is CTL, Cleantech Lithium. Already liking this with the resistance line break there around 22 pence. We were looking for 36 pence, probably as soon as the end of this month. It might actually be achieved a bit earlier. In fact, the strength of today's candle opening at the low and so far at the high, and also right on the 200-day moving average, does suggest we could actually do better than 36 pence. If you're a fan of the shares, you'd probably be looking for a target which is rather higher, and I'll just try and show you where the trend channel there may be. That could be as high as the resistance line projection there, which is heading up towards the 48 or 49 pence area by the end of next month. So above today's low, and I suppose the best thing to say above today's above the 50-day moving average at 24 pence. Looking for as high as 49 or 50 pence by the end of next month. So a very strong looking setup there, almost a sort of a cup and handle type reversal, saucer shaped turnaround that we've had there since June. So all looking good. Castillo copper is next, and covered this a little while ago, but we've gapped up again. I think this is the third or fourth gap in the recent past. underlines our view that, or the technical view, that 1.6 pence could be achieved by the end of next month, especially while we hold above the 50-day moving average around the 0.8 pence area. So things looking rather better for Castillo at the moment. And again, a nice saucer or U-shaped reversal on the daily chart. Requested stock next, coming in the form of Cornerstone. Here, I've looked at this before, and the key here really is to break above recent resistance around 11.5 pence. If you're being fussy, break above 12.5 pence, which is the 50-day moving average, and that line of resistance from January. If you can do that, then we could be up to 21, 22 pence by the end of next month, providing there are no new lows below the, well, I suppose at least below the 7 pence area, but likely to stay above 7 to 8 and to give us that nice target over 20 pence by the end of next month. But cautious traders wait for 12.5. On to Dukemount Capital, which has been reviving itself. We've broken that main October resistance line there, which is very healthy, and also broken above the 50-day moving average, which is now rising. As I've said many times before, the 50-day rising near the lows for a stock or a market tends to be a very strong signal, as does an unfilled gap to the upside, which you also have. So this is actually a bear trap gap reversal below 0.12 pence, and that should give us enough momentum to hit the top of that broadening triangle from February as high as 0.22 pence, maybe by the end of next month. Got a bullish divergence line which has been multi-tested since November, so at least 3 times there, so that is also looking good. But if there's anything there which is really cool, it would be regarded as the rising 50-day moving average. That is, I think that's rising for the first time since September last year, which is quite an achievement. On to Egdon, and here we've got the shares hitting the first target that we had there at the top of that rising trend channel from September, which is good news, around 5.8, 5.9 pence. End of day close through 6 pence. Could give us 8 pence by the end of next month, or perhaps even sooner. We've got the 50-day and 200-day moving averages both rising, and that uptrend there looking very good. It's basically been in place since the start of the year, or actually you could argue even since this time last year, but very strong trend there. And if only we only traded in stocks which had such strong trends to the upside. Gfinity, another requested stock by a dear Twitter follower. Here we've got a situation where already looking for recovery here with the break of the 50-day moving average at 0.9. Above that, we were looking for as high as 2 pence at the top of that broadening triangle from March. That's also the area of the 200-day moving average and the top of that gap down from March. So basically looking for 2 pence plus to be hit by the end of next month while we hold above the 50-day moving average at 0.9. Good moves in the recent past with Hemogenyx. I did signal or suggest that there was going to be there was a trend break from the break of that October resistance line there around 1.4 pence. At that time, the goal was to hit 2 pence, and hopefully we can hit that by the end of next month. If we're lucky, it might even hit that by the end of this month. Looks like a mid-move consolidation here, so 2 pence looks pretty well nailed on, especially when it's backed by a double bounce, double bullish divergence line bounce that we've had over the course of July. So things really set up again for another move towards the post-2021 resistance area at 2 pence plus on HEMO. Moving along to Cadence Minerals, which I haven't looked at for quite some time, but looks like that's bottoming out as well. We've got sharply rising RSI there, an RSI breakout through the 50 level, which is normally a good thing, and above the 50-day moving average at 11.25, looking for that resistance line there around 15 pence to be hit by the end of this month. On to Premier African, which is a difficult stock even at the best of times, and almost tempting to sort of avoid looking at it. But here we're just breaking that line of resistance there from February. We're in a wide rising trend channel from November, and the longer we stay above the 50-day moving average, currently at 0.32, the greater the chance of move towards 0.8 as soon as the end of next month. Again, a strong trend here actually, despite the fall back from the February peak at 0.5. It does suggest that we are finally on our way in terms of the upside. Lots of people asking for Tekcapital, and here we've gapped higher today. I think there's a lucid activities that the company was talking about, and here this bull flag breakout above the 200-day moving average suggests that while we're above 29 pence, we could hit the top of that broadening triangle from September as high as 55 pence, perhaps as soon as the end of next month. If the 200-day moving average gets its act together, which hopefully it will do in the next few days, we could have both a rising 200 and 50-day lines, which means that we're heading for a golden cross, which would be very pleasant, as the run-up to golden crosses tends to be the strongest part in the technical cycle. Now, the stock where it's pleasing that the shares have recovered after today's news, or bounced back up above today's with today's news, is Tirupati. We were looking for 50 pence by the end of this month. We've got it 16 days early, which is wonderful. And the view now is that the longer we stay above the 50-day moving average at 38 pence, the greater the chance of move towards 70 pence at that October resistance line. And that is penciled in for the end of, or by the end of next month. If we're really lucky, we don't really trade below recent support around 43 pence, which was late July resistance. So that would, they've got two choices on a potential stop loss there, but the headline here that we could be heading towards 70 pence by the end of next month. Just a couple of stocks to go now. First one is, or a couple of old favourites really. First one is Wishbone, where we've got a little bull flag breakout, very slow one going on here, and here we've got both the 50 and 200-day moving averages rising. That suggests that we're in a pretty strong technical position here, one that could take us to the top of that rising trend channel from this time last year as high as 18 or 19 pence. We've been looking for that for quite some time, slightly flummoxed by that decline from 14 pence to 9 pence from May to June, but I suppose the market was like that. Current position, though, is that above recent support around 12 pence, looking for 18 to 19 by the end of next month, and hopefully sooner. Finishing off with Ascent Resources, where I was looking for a double bottom, and a double bottom breakout rather. We broke that resistance line there from April. We had bullish divergence, which was the reason for suggesting that the shares could be ready to bounce, and end of day close above the 4 pence level, and the 50-day moving average could take us up to the 200-day moving average area, 5.25 pence, as soon as the end of next month. So something to look forward to there. At this stage, really well below 3.6 pence, and recent support delaying the upside scenario. That's it from me today. More updates tomorrow.